investing in ASB is a no-brainer choice. Guaranteed capital, cheap and affordable, and probably because everyone around you also buys into it, even the pakcik and also the makciks. Look, ASB is great, but what if I tell you that there is another investment out there that is comparable with ASB, and depending on your investing goal, it may even give you better returns? Well, in this video, I will make a detailed comparison between these two investment choices from their historical returns, fees, top holdings, limitations, etc. etc. Basically, it is an ultimate guide to help you find out which one you should actually invest in. In case anyone doesn't know much about Amanah Saham Bumiputera ASB, just from the name itself, you can already take a smart guess. Yes, it is a unit trust tailored for Bumiputera in Malaysia. And as for the non-Bumi friends here, you may look into ASNB, ASM or ASN, but that's a video for another day. And if it's not obvious already, ASB is extremely popular because your capital is guaranteed, since the unit price is fixed at 1 ringgit per unit and you will buy and sell at the same price. So technically, you cannot lose money, but in turn, you earn additional money from their yearly dividends and also bonus. Pretty amazing, right? Now let's put this aside for a minute, because here's another investment choice you should definitely consider as well, the S&P 500 from the US. But what is it? Alright, so the S&P 500 is an index that tracks the top 500 companies in the United States. In simpler terms, by investing in S&P 500, you are buying the best 500 companies in the US. And if the US economy goes strong or their stock market goes up, you make money from it. Simple as that. So to be precise, S&P 500 itself is just a tracker, not something that we can buy or sell directly. So to actually buy it, some really popular options are, for example, VOO and also SPY ETFs, or short for exchange traded funds that you can invest in through a stockbroker like Interactive Brokers. But then I know everything is just talk out sing song and play ping pong without a proper comparison in returns, right? I know. So this is the chart comparing the return of ASB versus S&P 500, and at a glance you can see the core difference between the two. S&P 500 gives positive and also negative returns throughout the years, while for ASB their return is always positive and rather stable. However, it's not all bad for S&P 500, because if you just zoom out and look into the bigger picture, its long-term returns are way better than ASB. And on top of that, the additional bonus in ASB sometimes comes with certain criteria. Like the latest in 2022, they mentioned that it's only for the first 30,000 units. So you see, it's not all sunshine and rainbows even for ASB. And by just looking at this graph, it almost looks like ASB is better. Steady return with extremely low volatility, and you can almost lose no money. Sounds like a no-brainer choice, right? Now, if we put it into another perspective, the annualized return of ASB and S&P 500, and then you will get a totally different story. If you invested in ASB from early year 2020 until the end of year 2022, you get an annualized return of 5%, which means an average of 5% increment every single year. But on the other hand, if you use the same amount of money to invest in S&P 500 instead, you get an average increment of 9.7% in your investment every year for the last 3 years. And if you have invested longer, say 5 years or 10 years or 15 years, the difference between both of them are even larger, with ASB giving annualized return of 5.5 to 7.5%, while investing in S&P 500 would give you an annualized return ranging from 10.2 to 13.7%, before tax of course. So how do you make a choice between higher risk, higher reward, which is the S&P 500, and also the slow but steady ASB? Well, I would say it depends on your time you plan to invest in. If you only plan to invest short term, like 1 to 3 years, the volatility in S&P 500 might eat into your profit. Might as well put your money into ASB. But if you're planning to invest for the long run, like 10 years or even more, then the S&P 500 is simply a better choice based on historical performance. And just before you ask, hey, is it just a few % difference in return every single year? what's the big deal, right? Well, it is actually a very big deal. I know it doesn't seem like a lot for the first few years, but when you compound it for many years, it will make a huge difference. Imagine 15 years ago you wanted to invest 10,000 ringgit and in front of you there are two choices, ASB and also S&P 500. So you proceed to invest the same 10,000 ringgit into both of them, just for example, and your wealth grew over time, and 15 years later, ASB grew your wealth from 10,000 to 30,000. Seems decent, but on the other hand, the S&P 500 fund would have turned your 10,000 ringgit into 46,000 ringgit. See that two difference? That's a staggering 55% difference. But don't close this video and go all in yet. Let's learn a little bit more about both funds so you have a better idea of them. For starters, ASB is 100% Malaysian, owned by the Permodalan Nasional Berhad (PNB), one of the largest fund management companies in Malaysia. Whereas the VOO ETF that represents the S&P 500, that is owned by Vanguard Equity Index Group, one of the world's most respected investment management companies. So no red flag here. Both are trustable companies and a safe place for your retirement money. And as for the type of fund, ASB is actively managed by the fund managers, where the managers would buy and sell to optimize their fund performance as they see fit, while VOO is passively managed by simply tracking the S&P 500 index, and there is nearly no human intervention in the decision-making process. So you may instinctively think that an active fund is better than a passive fund. Well, it could be, but in many cases, it is not entirely true. History has shown that most of the actively managed funds did not outperform the S&P 500 index for the past 10 years, because for passively managed funds, their biggest advantage is that their fees can be really low, so they can put more money into your pocket instead. And if you look at the expense ratio, ASB collects a fund management fee of 0.35%, which is pretty low if you compare it with the likes of other unit trusts or mutual funds, but it still cannot beat VOO ETF in terms of fees, as they only collect 0.03%, and the number may look very small here, 0.0 something, right? But when your investment fund is big enough, you will definitely see a difference there. Definitely, as the fees eat into your potential profit. Let's just say you invest 100,000 ringgit in both ASB and also VOO, and the returns are the same at 5%. Via the VOO, you can bring back 4,970 ringgit, but in ASB, your profit will be lesser at 4,650 ringgit. So this might be something you want to consider. And next is the fund size. ASB is currently managing over 186 billion ringgit, while VOO has about the similar number at 173 billion, but in US dollars. So if you convert it, then it is about 4 times bigger than ASB. And naturally, we want the fund size to be bigger so that they can provide enough liquidity. But I think in this case, both have decent size of funds, so good enough for both of them. And as for the currency, the one used in ASB is denominated in Malaysian ringgit, while in VOO, it is denominated in US dollar. And there is no saying on which currency is better, although we all know which one is better. But it all boils down to which currency do you prefer to store your wealth, basically between Malaysian ringgit and also US dollar. Which one do you think will depreciate less into the future? Well, the recent events suggested that the ringgit value has depreciated a lot to the dollars. So if you think in future ringgit will drop even further, then maybe, just maybe, it's a good idea to store some of your money into US dollar as well. Now let's move on to the underlying asset in both funds. And in terms of country, ASB invests mostly in Malaysia with less than 10% of the fund invested internationally. And meanwhile, VOO has its investment only in US companies. And as for the asset class, ASB owns 80% stocks, 5% fixed securities income, basically bonds, 1.5% ETF, and the rest is in other investments. And the number might fluctuate every single year depending on their investment, but it won't run away from this by a lot. So their top 5 holdings are Maybank, Sime Darby companies, Government of Malaysia, and also Tenaga Nasional Berhad (TNB). And from their top holding companies, we can see that ASB prefers big companies that have matured and give high dividends every single year, which is not a surprise since ASB holders earn on dividends and bonus. While on the other hand, all assets that the VOO ETF owns are US stocks, and their top 5 holdings are Apple, Microsoft, Amazon, Nvidia, and also Google. And I believe there is no need to introduce them further as they are giant US companies that dominate businesses globally in their respective niche. And you can see all of them are tech companies, so the most important factor for investing in VOO is actually to capture their potential growth. And when buying VOO, we often don't really care about the dividends since they are subjected to a 30% dividend withholding tax. Not the worst thing if you ask me, since it's just a 30% tax on the 1.5% annual yield. And speaking of the taxation, profit for the ASB is not directly taxed, but there is a 2.5% tax for zakat. Meanwhile, if we buy VOO, the capital gain has 0 tax for you, but the dividend is taxed at 30%, which is a lot. But luckily, most of the profit of buying VOO comes from capital gain, and there is actually a way to dodge the 30% withholding tax and pay only half of it through island domicile S&P 500 ETFs, which I have covered extensively in my previous videos, so feel free to check it out. I'll put a link down below for you to check it out as well. And then we also have the brokerage sales fees, basically a fee that the platform or the broker collects every single time you make a transaction. And kudos to ASB that they have 0 fees, while the VOO ETF or the broker to be specific, charges a small fee of 50 US cents or about 2 ringgit every trade, assuming you are using interactive brokers to trade them. Next in line, accessibility. Generally, ASB is limited to Bumiputera in Malaysia, while VOO has no limitation. Basically, Abu, Mutu, Abeng, Akau, everyone can buy into VOO ETF as well. And now, if you are to buy any of them, how much is the price? Well, the price of ASB is fixed at 1 ringgit per unit, and the minimum investment is only 10 ringgit. Of course, you can buy more than that, but do note that there is a maximum cap of investment as well at 300,000 ringgit. While to withdraw, there is also a 3 times withdrawal limits within a month with maximum withdrawal of 2,000 ringgit. Not per withdrawal, but per month. And that to me, that is a very huge handicap and restriction. And alternatively, if it is VOO we are talking about, it is priced at around 400 US dollar, and that is around 1,800 ringgit per share. But here is the magic of US stock including this ETF. You don't have to buy a full share. And so how much is the minimum? Well, it is totally up to you based on your budget. You can even buy it at 50 ringgit. And that being said, do note that not all brokerages provide fractional shares features, so that is another perk of buying through interactive brokers. You can check out in the link below for more. So one great thing about ASB is that your capital is pretty much guaranteed and you cannot lose money because the unit price is fixed like we mentioned earlier. And for S&P 500, due to the different nature of the fund, it is a growth fund. Yes, it is possible to lose money when the market goes bad, which usually happens once every 10 to 12 years. So it is best to conclude it with high risk, high reward. And last but not least, the Shariah Compliance. 70% of the holdings of ASB are Shariah compliant, but the fund itself is approved by the Selangor Fatwa Committee, so there is no issue on that, obviously. But on the other hand, companies in S&P 500 do not have Shariah compliance, or at least not all of them have it. So if this worries you, there is a solution to it. You can check out the S&P 500 Shariah Index such as SPUS ETF, where only Shariah compliant stocks will be included into the ETF. Anyways, for those investing in ASB, I think it looks like a pretty solid deal, so keep investing in it. But if you also like to have higher returns in the long run, I'll say, why not both? Invest in the S&P 500 while keeping the ASB. And if you need another reason to invest in the S&P 500, here's my little pinch of salt. Our wealth and investment are so concentrated all in Malaysia. Think about your house or your EPF savings. Everything is locked in Malaysia and Malaysian ringgit. And as much as I would like to hope for Malaysia to be all maju and makmur, are we that confident that our country's economy will soar and beat the growth of the US for the next 20 years? if you are not sure, then you may want to think about diversifying your investment portfolio into the US market as well. So if you're up for the challenge, I would greatly suggest you to check out this video to learn more about the different S&P 500 ETFs. See you over there.